Well, Bank of America out with a new note highlighting that Wall Street is on course for its third best year since 1990. And it's all thanks to the Fed. Joining us now is Carson, founder and CEO of Carson Group. And Ron, when you take a look at what Scott was just saying, we're sitting right near fresh all-time highs. Take a look at the market's momentum. Is this going to ride into the second half of the year?
You know, it's really interesting. I think it's going to depend on trade. You know, the old saying is, "In God we trust." Now it's in Fed we trust, because, you know, Powell has pretty much said they're going to put a floor to the market. And, you know, it's hard to fathom. We just talked about the fact that it's the third best in the last 25 years. The other 2 years were 1995, 1997. You may or may not remember 1996. I think December-ish, beginning of December, was the famous irrational exuberance quote by Alan Greenspan. Mm-hmm. But anyways, of those two cycles, as we were coming to interest rate winding down those hikes and actually starting to cut, you know, the markets did really well. And another interesting thing is, if interest rates stay where they're at, and not because of extreme economic weakness, just because things are the Goldilocks, they're just right, I mean, equities could actually expand their multiple from here.
When you take a look at how to invest in this type of environment, with the fact that we could see another move to the upside here, where are you seeing opportunity?
We think technology, healthcare, undeniable trend. You know, get in front of a trend, throw yourself in front of a trend, you'll do pretty well. And we know, you know, healthcare, we're all going to want to spend a lot more money. We're going to live a lot longer.
That's interesting, because it's been a big underperformer.
It has been underperformer. So take the contrarian approach on that. And then technology. I mean, technology is changing our society. And I think, you know, up to this point, the change has been a trickle and the avalanche is near. I mean, I invest in a lot of, you know, fintech companies that are just getting ready to emerge. Think of the technologies in the garage. And so being right and being surgical is going to be the trick there. I think the days of just buying the whole market and not having to worry about it, I think they're going to be gone for a while. I think you're going to have to be very specific, very surgical, very intentional, and really understand the businesses that you're owning if you're going to buy individual stocks.
So you're saying that this is really a stock picker's environment right now?
Yes, and I think it'll continue to be.
When you take a look at a lot of this optimism that we've been seeing in the markets lately has been fueled by the Fed, the fact that the Fed is expected to cut rates at the end of this month. When you take a look at all the recent data out there, when you do your own assessment, do you think that the Fed should be at this point where a rate cut is pretty much priced in?
I think so. I mean, I talk to a lot of CEOs, both clients and non-clients, and they're just a little bit on edge about, you know, what's going to happen with the trade dispute. You know, you're only one tweet away from having, you know, confidence ratcheted down even further. And so I think there is some real deterioration beneath the surface. You know, you've seen jobs numbers pretty good, better than expected. The consumer is actually doing pretty well. But, you know, it wouldn't take much to have confidence wane a little bit here. And quite frankly, I think the world economy is more fragile than we think it is.
You talk about the consumer doing relatively well. At what point are we going to see a pullback a little bit in terms of what the consumers are feeling, what the consumers are thinking? Because even though we have seen a little bit of a drop in confidence, it's still, relatively speaking, at pretty high levels. It's
at high levels, but let's go back and talk about the market. You know, we've always heard the wall of worry. That's what the market likes to climb. I still, to this day, have clients that are still in the back of their minds, they're thinking about the financial crisis, and there's still an enormous amount of, you know, I would say underinvestment. There's still a lot of cash sitting on the sidelines. And, you know, so I think that, along with the Fed put and Powell saying they're going to cut interest rates, is going to put a floor, you know, under the market. So it's hard to say. We've been used to, you know, the market will do whatever it needs to do to prove the largest number of people wrong at any given moment. I've been in this profession for 36 years. It continues to surprise me. Who would have thought in December, you know, with the sell-off that we had, we would have the third best, you know, half start to the year in the last 25 years. So trying to outguess that, I think what you should be doing with your portfolio is making sure you're getting your risk budgets right. So you don't do something counter to accumulating wealth, something stupid, something emotional, when you get the next round of volatility.
All right, Ron Carson, we'll leave it there. Thanks so much.
Thank you.